Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, January 8th. Well, we've got another down day in the markets, again with China. We did stabilize in the overnight session here. China released their circuit breakers, so got a little bit of a buying. So we stabilized a little bit. But today really is all about non-farm payrolls. They're coming out at 8:30 this morning Eastern time here in the United States. So just take a good glance and see what happens here, guys, because remember, news does trump the charts. I am looking for a bounce for the next couple of days, 2, 3 days, and that's going to really gauge on if this market has a top or a top is in place, if you will. I do think that the markets have topped unofficially in May, maybe June, but I want to see what this rally is and if this rally has any kind of legs, volume behind it, sort of like a thrust to the upside, or is it just a sort of a weak rally that there's no conviction behind it. And I'm going to really call a top here when that does happen. Okay, so right now I'm not going to look to do anything. I want to see what that next retracement rally is. We're getting close into bear market territory. I will go over that in the Pro Trade Premier video on Monday. A lot of analysis work on Monday. The videos get a little bit longer in the Pro Trade Premier, and of course we'll put some out there for the free guys as well. Let's get right into it, okay? McClellan Oscillator. Are we oversold in a McClellan Oscillator? Well, we're not. We're only at about 55%, 56% here. So to get oversold, we need to get below 70, negative 70, and then we can get below those Bollinger Bands like you see in these circles here. Without it, guys, there's still room to run to the downside. Now, nothing goes straight down, as it has been the last 4 days of trading of the first part of the new year of 2016. So I suspect we get some sort of retracement rally, obviously hindering on no market shock from the non-farm payrolls report that come out at 8:30 today. Okay, but there is still a lot of room to run to the downside before we become oversold. So that is a big concern of mine as well. Maybe if non-farm payrolls it does not deliver, then we could get a big flush in the markets this morning. But I don't think that's going to happen. I think everybody knows what the numbers are going to be, or at least they have an idea. I don't think it's going to be a shocker today. But again, it's not what I think. It's what the markets do and how the markets react to those numbers, okay? Very important. All right, let's go right into these indexes. I want to show you a couple things here. All right, so now we know we have this, and I don't mean to beat over the head, but I want to let you know, just want to, for new subscribers and new trial guys, and I just want to make sure you see that there's M formation here. There's that neckline. So what I'm looking for now is I'm looking for a stabilization. Here is that next target. The bigger target would be this little cluster area. You can see we have this thin zone, right? So that's what happens when when price starts to break down. There's lack of volume. So what happens? You get this flush, and this is what's happening here now. So once we lose some of these key areas here, you'll see this market just go right to the target area, and this is going to be this spot right here. That's the bigger picture, okay? Now, what I do like is that I think that what's going to happen is that we're going to go lower, right? If not, hold here and then back test that area and then break. And I think that's what we're looking for. If that happens and we get this retracement rally into this zone, all right, which is the neckline area here, if we get this and fail, that'll create that next lower high from this high, and then I'm going to call a top in the market, at least in the short term. All right, I would suspect we get a decent correction in the first quarter, and then we could start looking to buy stocks again. All right, but right now I'm not looking for that. I'm looking for some further weakness. Again, not today, tomorrow. I'm looking for a bounce the next few days. But again, anything can happen. Also, look at these trend lines that I drew on the RSI and MACD. I would be more encouraged to see that break back up to the upside, and do again back test and then go higher. Then I think we have something. But right now you can see they're very weak, and you'll see it on all of the indexes. Transports, and I want to show you this, and I've showed this to you yesterday, but I want to show you the weekly from 2012. Okay, this is it, guys. This is where I'm saying is I do think that we have a very weak transportation sector, which is deemed our leader of the indexes. And you can see here a head and shoulders pattern. I had it out on the other charts, but you can see here's your head, here's your shoulder, your left shoulder, here's your right shoulder, and then the neckline comes in like this, okay, right about here. All right, and here's that bear flag. Remember that back test? I always say let's look for that bear flag, and failed right here. Bam. Now we got this long-term trend line support from 2012. This is a very big support area. I don't think it's going to crack right away, but I wanted you to be aware that the 200-day moving average right here, a lot of fund managers, they break below it. We start losing some of the stocks here. What's going to happen is they're going to start lightening up the load to the long side and not buy. So that's not a good sign either. So this is really important, okay? We need to keep an eye on that. Transportation daily, you could see here, very ugly looking chart. Symmetrical triangle break. And again, watch these little trend line areas, okay? Put them on your chart. Standard, MACD 1226.9, RSI 14.3, okay? And Russell 2000, same thing. Look at these trend line areas. Watch the break here. And again, not looking too good. Another one, a secondary leader, breaking down from all of 2014 and now making new lows. This is a very bad sign, guys, that we're headed into a correctional phase here. All right? Same thing with the Qs. Keep an eye on the big guys. Well, let me get that. Sorry about that. Keep an eye on the big guys, the Amazons, the Googles, the Facebooks. This is what makes the Qs index top 10. Gilead, those are the big guys. Again, M formation, repetitive patterns. I'm looking for a bear flag into this area and then fail. That's what I'm looking for in this retracement. Now, I want to see it prove me wrong what the analysis says, and if that's the case and we break back into the channel, then we're going to tag this upper end here. But we're way away from that right now. Let's see this break back up, these retracements, and then if it does fail, then I'm going to call the top. All right? Hope it helps, guys. Be safe out there. Wait for that non-farm payroll number to come out, and let it digest and see what the number does. Remember, it's not the number, it's how they react to the number, okay? Have a great weekend, everybody.